Quitting your job forever sounds like a fantasy, but replacing a $5,000 monthly paycheck with passive income makes working entirely optional. And all it takes is just $10 a day to build the exact system that pays for it. Most investors follow the same path to get there. They put their money into a growth fund like the S&P 500 and wait 30 years for the account to reach $500,000. This diagram shows the problem with that plan. Because the S&P 500 is built for growth rather than cash flow, the dividend yield sits around 1%. That tiny sliver at the top means a $500,000 portfolio only generates about $437 a month. To bridge the gap and find the other $4,500 needed to survive, an investor is forced to sell off shares of the account they spent 30 years building. This creates the liquidation trap. If the market crashes 30% early in retirement, your portfolio plummets. Forced to sell shares at a discount to cover rent, you have fewer shares left for the recovery. This destructive cycle accelerates until the account hits zero. Standard growth strategies force a choice between owning shares and paying bills. This is a plan for the slow, systematic exhaustion of your assets, rather than a sustainable retirement. Solving this requires a pivot to income investing. The goal is to build a portfolio where the principal is never sold, removing the risk of market timing entirely. This relies on the dividend. When you own a share, you own a piece of a profitable business. Those businesses structurally pass a portion of their profits back to you as cash. These payments come from corporate earnings, not from the daily fluctuations of the stock market. Even if the broader market drops 30%, those profit-based checks can continue arriving regardless of the current share price. To make this reliable, every fund in the portfolio must pass 3 filters. It needs a high enough current yield to matter, a sustainable track record of paying through recessions, and wide diversification to protect against any single company failing. These filters change the portfolio's core function. Instead of waiting for a high sell price to access cash, the investor owns a machine that generates income in any market condition. The architecture for this machine splits the $10 a day into 5 equal 20. This acts as an insurance policy, protecting your income in case the American economy has a stagnant decade. Component 4 is GQRE, representing the real estate slot. This fund holds real estate investment trusts that collect rent from apartments, warehouses, and hospitals worldwide. These trusts are legally required to pay out most of their profits to shareholders. This allows you to bypass the work of property management while still collecting the rental income. Component 5 is GEPI, the heavy lifter. Yielding over 8 measured. Building this starts with $10 a day split across these 5 colors. Every dividend check the portfolio generates is automatically reinvested back into the system to buy more shares. The system starts with a 4.58% blended yield, but the secret to the final paycheck is that 5.65% dividend growth rate. It means that every year, the companies you own are paying you more for every share you hold. After 10 years, the account value reaches $53,000. The combined effect of your daily contributions and those growing dividends creates a passive $227 every month. By year 20, the marker advances to nearly $193,000 in total value. The monthly income has now scaled to $1,137. At the 30-year mark, the account swells to $669,000. Only $109,000 of that came from your pocket. The other $559,000 is the result of 3 decades of reinvested dividends and market growth. Because the dividends themselves have been growing at over 5% annually for 30 years, the yield on your investment has skyrocketed. The portfolio now generates $5,230 every single month without you ever selling a share. Financial freedom isn't measured by the size of the pile of money you sit on. It is earned through the sustainability of the cash that pile generates.